Okay, so I'm going to go over a position that has multiple components, and I'm going to start with some fills. But let me actually start here. All right, so this was put on yesterday in the post, and it was a 1 DTE expiring today. And what I did here, and by the way, yesterday's close was at 51 and change. So right in the area where it closed, I started to build something for the following day. I bought two 3540s and I sold the 4550 one time. So this is a 1x2. And the put spreads that I bought at 3540, that was done for $1.40. So total cost of the trade was $1. This is excluding commissions, by the way. And here's what the P&L looks like. So here's the cost of the trade. And since I'm short this vertical, here's the downside risk below the 40 handle. Then the trade becomes profitable. And there are ways to manipulate the verticals. So starting at about 6:51 a.m., and this is Pacific time, by the way, is when I started to make adjustments to the position. And we can see that one of the things I did here is I did a 3530 put spread. So let's take a look at how that affects this current structure. So the next thing I did was I went out and what do we do here? Okay. So we have the 43. I sold the 3530 and then I bought the 5045. So I basically closed out the initial short structure between 50 and 45 and I created a butterfly down here. So notice how that changes the risk profile. It boosts everything up because if we look at the prices where I sold these things, so I sold the 3035 for $1.30, one of them, and remember I had two. So it was initially a 1x2, and the strikes were 40.35. So we can see that since I sold a vertical down below here, this basically butterflied one off, and then I covered the 50.45. Okay, so that brings the net cost actually up to $1.50, and it leaves me with this structure. And then the next thing I did was I created another butterfly. So if we follow along here, the initial components were the selling the 50.45 vertical, purchasing two 40.35, butterflying off one of these longs, and then I closed the initial 50.45. And then after that, I added another, I butterflied off the other half of the 35.40 by selling the 35, buying a 30, and that leaves me with a small credit and basically a butterfly with the center strike at 35.40. Now, based on the market action today, which was slow, I wanted to add more of a profit tent, widen it out, but I wasn't able to do it. So the next thing I did was I sold another vertical spread down below, and I used the 10, 15 strike lines to do that. So we can see that I sold a 15, bought a 10, and I did that for, it looks like 80 cents. So it brings up total credit to 95, leaves me with the following structure with newly created downside risk below 68.10. Okay, still not done. I can work with this. This trade was done at, let's see, let's verify the time on this one. Nope, I don't need that. Let's verify the time. Here we go. At 7:24 a.m. Okay, I sold the 68.15, bought the 10 for 80 cents. And then subsequently, I butterflied that portion off. We don't need that. I butterflied that portion off by going to the 2015 strikes. And I bought that for 75 cents. So our next trade created that. So now I have a 2x4 centered at 35 with the apex being at $1,000. And I have 1x2 centered at 15. The apex being 500 plus whatever credits I have, which is a small credit of 20 cents. All right, still not done. It's only 7 something in the morning. Let's see. 7:47 in the morning. I took a little break. Well, actually not at that point. Okay, the next thing I did was 25.20. And what do we do here? Well, I'm selling another vertical, this time, as I mentioned, using the 25 and 20 strikes. I did this for $1.05. Let's move along. And here's the 25.20. So now I have this weird structure down here where I'm basically setting myself up to have another butterfly in this region in between the lower bound and the upper bound as far as the butterflies are concerned. All right. Then I have this third butterfly that I wanted. So basically I have a 2x4 butterfly and centered at the 35 strike. I have a 1-2-1 centered at the 25 strike, and I have another butterfly centered at the 15 strike. So one thing to note here is there's no risk, so to speak, below the zero line because all of these were done for a small credit of 25 cents. Use the multiple can of 100, the multiplier, and there's a $25 minimum situation as far as wins are concerned. Min win of 25. I got a couple spots. Let's just call this the row on the bingo card, where at 15 I have an extra $500. At 25 I have an extra $500, and at 35 I have my bingo card. My bingo spot hits $1,000. So I have this row on the bingo card here in a market that's been very quiet, where I can make the sweet spots are 1,000, 500, 500. Oh, a lot of trades, so to speak, and maybe some people be deterred from constructing something like this because of commissions. But in my opinion, the commissions are well worth the price of entry. So that's not something I worry about, but to each their own. And we can see here that these commissions will add up, but that's okay. I'm content to pay the commissions to end up with the following. We have about 40 minutes to the close. Market's currently trading at 43. So we're in the, if we look at the range of this profit 10 from 40 to 10, we're in the entry level and with various sweet spots, which I mentioned. One being there, 35, the other being at 25, the other being at 15. Now, I'm not saying that the market's going to close here. It can close anywhere else, above, below. But if it does close in here, I have a few spots in this row, so to speak, where some decent profits can be made. Okay, that's going to be it for today. Thank you for watching, and good luck trading.